Hey guys, welcome back to the channel. Today I have prepared a market outlook for the coming week. The focus will be on the ECB interest rate decision that will be on Thursday. However, we are going to look at all the economic calendar and the fundamental perspective and what we may face. So let's begin on Monday, April 8th. We have very soft data and the focus will be during the European afternoon. Swiss National Bank Chairman Jordan's speech. We have to be careful because usually the Swiss National Bank sends some messages that are very weird and they don't care at all how the market may move after their comments. On Tuesday, April 8th, we have soft data for the major part of the day. ECB Bank Lending Survey. This is the only important report for Tuesday. So as you can see, all the data are very weak. They are not important. On Wednesday, April 10th, we have Reserve Bank of New Zealand interest rate decision. This is going to impact all the New Zealand dollar pairs. During the previous month, the interest rate it was 5.5%, and it is expected that the Reserve Bank of New Zealand may not change the interest rates. So we may see the currency pairs not to move, but we have to be careful from the monetary policy statement. During the opening of the US market, we have consumer price index this time. We have to be very careful again because the market is not reacting in the same way during this month. Beginning from January, everything is moving in a strange way. It is expected a slight increase in the inflation data. However, we have to be careful because during the previous week that we closed, we saw that we had non-farm payrolls data. They came in at 303k, above expectations, but as I explained also on the previous video analysis, this was also related with the ADP data that were reported above expectations as well. So they were reported at 184k, and also the job openings one day before, they were reported very high again, 8.75 million. So all of this was in line, but during Friday we saw that the US dollar became stronger only during the first 30 minutes, and later it was weaker. The market began again to discuss about the rate cut from the Fed, that the Fed is going to cut the interest rates probably not on June, but probably later. But now this is getting a very confusing situation because it is not clear that during the previous month it was discussed that the Fed is going to cut the rates on March and in June, and we saw a weaker dollar. And now the market is discussing again that the Fed probably may not cut the rates in June, may cut them later, and now the US is still weak despite the strong data. So it's a very ridiculous situation, everything with what is happening with the US dollar. It is weak in weak data, is weak in strong data. So let's see what is going to happen. However, the focus for this week will be on the CPI data, the first one, and the second one will be the ECB interest rate decision on Thursday. So the only focus will be here for the second part of the day. We have seen many comments from ECB representatives that probably the ECB has to cut interest rates on June meeting. On the other hand, also the inflation is slowing down. It was reported 2.4% during this month. It was lower than the previous month, and this is increasing the chances for a possible rate cut. We have to be careful because probably the market may anticipate a possible rate cut on June meeting. President Lagarde probably may send any message during the press conference, and we may see a weaker dollar. So this is the only problem that we may face. However, let's see, because the market may also not move at all. And on Friday, we have data from China that they are going to impact the Australian dollar, and also harmonized index of consumer prices that is going to move euro pairs. So this is overall, and during the close of the London market, we have Michigan Consumer Sentiment Index. It is a preliminary number, as I see. However, it is going to move the market, probably 30 to 40 pips as maximum. So let's see what is going to happen from a fundamental perspective. Let's get back to look at the technical perspective at this moment. As you can see, we are going to make a breakdown on Euro USD. The price is moving between these areas here on the weekly chart. The price has been stuck since a long time, since December 5th. So this is approximately 5 months that the price is moving in this area. Overall, also on a daily chart, it is not clear. We can see that we have a very strong support zone that is located close to 1.07, and as you can see, when the price came close to this area during this week, increased again. So this is without direction so far, because from this point we may see the price rising further, but we may also see the price breaking this structure zone, and it can move down even more. So it is not that clear as a situation. For the bearish movement that probably everyone may expect from the ECB interest rate decision, for the price to move down more at this moment, we have to see euro to break through 1.07, and later it may continue up to 1.05. So this is the only scenario that I see for the bearish movement happening. Let's see what is happening on a lower time frame. So this is what happened on Friday. After the non-farm payroll data, look at where the price was at this point, and the maximum that managed to move down, it was this area here. So overall, all the movement was very small and everything was deleted. It was only 50 pips. Considering that the US economy is performing very well, very strong data, it doesn't make sense for the US dollar to be in this situation. However, this is market, and on this picture we have something similar with the picture that we had also on GBP USD. The price is moving within this pattern, and it is likely that we may see the price moving down in this way. So this is the only scenario, and it will be in this situation as a type of broadening pattern that is moving down. So let's see what is going to happen for this scenario. It can be supported by the idea that the ECB is going to cut the interest rates before the Fed. It can happen. And on the other hand, for the bullish scenario, probably we have to see the price to bounce above this pattern, and in this way it makes sense that we may have the first impulsive movement. One was corrective movement, as you can see, so the price is making these movements here, and the next one will be the next impulsive movement again. However, we need confirmation for the bullish move, and on the other hand, we are still below this pattern that is still showing that it has the chances to move down. And considering that the market will focus on the ECB interest rate decision and the possible rate cut, and the messages that ECB representative already sent during this month, it is possible that the price may move down slowly up to 1.07. This is overall for Euro USD. However, we have to be careful because the downside can be limited, considering that Euro is still holding very strong. Even if it moves down, it may bounce again, and only any breakdown on any dovish signal can push the price down further. So it's a bit complex, but as we have seen during the big events, the price tends to create this type of patterns that we can interpret in many ways. So let's move on to the next one. This is EURCAD. I have posted this analysis also before, a structure analysis. When it was posted here, the price spent a long time, so it was in this area for about 1 month, as you can see. And as I explained on this analysis, if the price was going to stop below 1.4765, the chances were higher for a bearish movement, and a bounce above this area, the chances were growing for the bullish movement. As you can see, the price didn't manage to rise, so it reached both targets, tested the second zone, and reacted again. As you can see, we are in the same situation again here for EURCAD. It is not worth to change the time frame. It makes more sense that if the price is going to break through the red zone, it may continue with the other zones that I have pointed out on the chart. And if the price will stop in this area again, it can move down where it was before. So we are at a breaking point on EURCAD. On a lower time frame, we don't have anything clear yet. The price was aggressive up, so we have to see how it will react in this area. The next one that we are going to look at is EURCHF, another structure analysis that we had during the last weeks. It was posted on March 25th here. The price was stopped in a very strong way above 0.9692, and it reached in a perfect way the second target. And as you can see, this structure area worked out very well, and EURCHF already is taking a pause below. We have to be careful only from the ECB messages. I am not expecting President Lagarde getting hawkish this time. Probably they may send signal that we have to see the data and we are data dependent, and we may see the price moving in this zone here. But if they will announce any possible rate cut on during the June meeting, it can be possible that from this zone any breakdown below 0.9690 can push the price down further, and I think that it can come at probably the maximum movement can be in this zone. We have structure resistance in this zone here, structure resistance that was before, we have support that was created, so the price can face support again if this is going to move lower. However, this bearish movement may happen only on very dovish comments from the ECB. So this is a possible scenario, and later we may see the price rising further again. On the other hand, exists also the possibility that we may see the price moving within this zone, probably to create a larger correction, and during the coming weeks we may see EURCHF rising and to continue the new bullish trend that it is already creating. So this is also for EURCHF. All the focus is only on the ECB interest rate decision and the press conference. And the last one that we are going to look at is USDN, that we have seen several times. When the price was at this point, I posted the analysis. It moved down very well from this point. It was at 158 18 and it reached 146.50. It reached the target, perfect retest of the structure, and increased again. So from this point here, all of this movement was approximately 430 pips, 400 pips. And from this area, it looks like that the price may rise further. However, as you can see, we had Bank of Japan intervention at this point. We saw intervention again. The previous bearish movement was 1170 pips. So this is raising the chances that probably we may see the bearish movement. It is discussed also for a possible breakthrough this area and further rise here. However, I think that the chances can be very small for the bullish movement, considering that the Bank of Japan already increased the interest rates, despite the fact that the market didn't react. But on the other hand, the Bank of Japan is still sending messages, and as long as the price is in this area, it is creating big problems with their exports, and I think that they should take further actions. However, also the price in this zone, I can say that it is good because it should move down, but probably the Bank of Japan may intervene soon, taking in consideration that the price is not breaking through this zone here. So let's see what is going to happen. It's a bit strange situation. However, the Bank of Japan is still waiting for this movement. The only problem that I think that we have to be careful is that we may see any false breakout and later it can dump easily from this zone. So this is overall for the coming week. Focus will be only on the ECB interest rate decision, in my opinion, and on the USD CPI data. So that's all for today. I hope you guys enjoyed this market outlook. Please don't forget to hit the like button and follow. Bye bye.